So Bitcoin is digital energy. I believe over time, natural resource rich countries, including potentially Canada, will realize that it's much smarter to price and store the value that they have exported for their energy, store in the present value in digital energy. So it's very important for the listeners to understand that credit is the most important market in the world, far more important than equities. It's also far bigger than equities, but most people don't understand the correlation and the relationship between credit and equity. So I always come at everything with a credit lens. Now, final statement, credit ranks as a prior claim in the capital structure over an equity. So that's to say that if a corporation has bonds or debt outstanding and it's publicly traded or privately traded, the equity is a subordinate claim. So you better know what's going on in the credit markets if you own a subordinate claim to the debt. And most equity investors have no clue what's going on with the prior claim or the senior claim, that being the debt. And they get trampled when the debt guys like me use the equity as cannon fodder to hedge our positions in the senior claim. So very important to remember, credit markets run the world. What I may be an expert in is 35 years of mistakes, okay? But that being said, I've made mistakes over 35 years, but I survived them because I like to think I'm a good risk manager. And that's to say that if you are in a losing position, you cut your losses. And if you're in a winning position, you don't sell your winner, you actually harvest your winner. Most people do exactly the opposite. Our good friend Shifty Peter Schiff heard about Bitcoin when it was $10 US per coin and has been forever bashing it. The smart thing for Shifty Peter to have done was to change his investment guidelines or investment thesis as the information changed. He's a horrible risk manager. He's admitted it to me on a debate I had with him. I'll just tell you, boomers need to change their investment thesis when the information changes. Bitcoin is the most beautiful financial technology that I have ever seen in my 35 years of managing risk. It is the best asymmetric return opportunity I have ever seen. And some of these other stupid old boomers, myself included, when I first heard about Bitcoin, I believed what the newspaper narratives were writing. At least I did my research. I went down the rabbit hole. I have never been more confident that Bitcoin is the solution to the fiat Ponzi. Because you ride your winner, you harvest it, meaning you don't cut your winner from to the extent of a harvest. I guess what it means is you ride your winners. You cut your losers, you ride your winners. What I should have said was you grow with your winners, right? What human nature is to be able to go to a cocktail party and say, oh, I bought Google at X dollars and I sold it at 2X. The problem is Google is now 100X. And everyone's a hero at a cocktail party. They never talk about their losers, right? So that's human nature, is to sell your winners and hold your losers in hopes that your losing position will come back to be a winner. I'll tell you what, that's the hardest part about managing risk and managing money, is to focus on cutting your losers. That's not what you look for in a financial advisor. If your advisor or manager does not care about your money and your risk profile, I suggest you go out and find another financial advisor. Let's focus on what Bitcoin is, though. It is basically the best hedge against the fiat Ponzi. Now, Shifty Pete and I both agree about the fiat Ponzi. He just refuses to evaluate the intrinsic properties of Bitcoin that are better than gold. And that's a big problem because he is myopic in that extent, and he's going to cost his unit holders a lot of money over time. So I was, as I mentioned, I grew up in Montreal, and there was a mutual friend that was trying to start up a Bitcoin closed-end traded fund that was to trade on the Toronto Stock Exchange. Now, we were successful in that endeavor. I'm jumping ahead a little bit, but initially when I agreed to meet him in Montreal, I was skeptical about Bitcoin. As everyone, you read what you read in the papers, you hear about Mt. Gox. This was back in 2016. You know, I got some of the salient points. Well, there's only 21 million. It's decentralized. It's based on mathematics and code. But the aha moment for me, Gary, was when he showed me the blockchain in action, the Bitcoin blockchain in action with transactions and the mempool and the block rewards on the web. We use tradeblock.com as the visual, but I'm an engineer and I'm very visual. I was like, oh my God, this thing is alive. It's a breathing, beautiful technology that's functioning right in front of my eyes. And so my aha moment was when I saw the blockchain functioning and the hashes going across and the transactions and the mempool. And I'm like, all in. I said, this is the solution to the fiat Ponzi that I'd been looking for literally 30 years. And I'll just summarize with one thing. In 1988, the Royal Bank of Canada was insolvent, which is to say that the value of its loans, if you marked it to market, the value of their loans was lower and the losses on the loans was higher than the book value of equity. Royal Bank of Canada was insolvent on its way to bankruptcy in 1988 due to the Latin American debt crisis. So I've been searching for this, and that's why I'm so happy to find Bitcoin in 2016. Bitcoin is very simply a decentralized network that allows the transfer of, in my opinion, digital energy from person to person or peer to peer anywhere in the world. And it will settle on chain in 10 minutes. Now, there are layer 2 and layer 3 applications, such as the Lightning Network, that allow those settlement times to be instantaneous. But at its base, at its layer 1, Bitcoin is based on a decentralized network where there is no CEO, there is nobody controlling this network except for nodes and miners all around the world. And the most beautiful thing is the reality of central banking causing all the problems in our financial world, in my opinion. Bitcoin solves the problem of central bank shenanigans. As you know, I'm involved in a power company in Canada. I believe, again, that Bitcoin is best described as digital energy, okay? A monetary store of value, an ability to transfer the value of your work energy over time and space to be consumed in the future. But as you mentioned, there's some small countries that have embraced Bitcoin as legal tender. I believe that trend will continue, and I believe it will continue when a large energy producing nation that is sick of being a hostage of the petrodollar decides to price their valuable natural resource energy in digital energy or Bitcoin. It only makes sense, right? From the concept, from the perception of an engineer. Why would you sell your valuable natural resource energy for petrodollar fiat that can be debased by the US financial system and the SWIFT system, etc.? So Bitcoin is digital energy. I believe over time, natural resource rich countries, including potentially Canada, will realize that it's much smarter to price and store the value that they have exported for their energy, store in the present value in digital energy, so that over time, that energy is conserved so that you can utilize it in the future when you need it. Is Canada the first G7 nation that will adopt Bitcoin? I'm not certain, but I do know this. Canada has sold all of their gold reserves. We have 0 gold reserves. It would probably be smart, in my opinion, if Canada decided to use or at least embrace Bitcoin as a treasury reserve asset. And this is where I think it's going to go in the future. I think gold will become less important as a treasury reserve asset. I'm certain that US Treasury bonds, they will replace that with Bitcoin. Will they integrate it with their energy infrastructure and energy natural resource benefit? I think they may, but Bitcoin's only 13 years old. Lots of potential outcomes to come, but it's silly cheap on a price basis, in my opinion, because once you do the math to figure out what it means if larger countries embrace Bitcoin as a reserve asset, wow, that's when the math gets exciting. I think the price would explode to over $500,000 per Bitcoin, but that's only because I've done the math. And in an event where Bitcoin becomes 5% of global financial assets, which in the event that the world's largest oil exporter, Saudi Arabia, decides to price their product in Bitcoin, people would be scrambling to get a percentage of their global assets in Bitcoin. So at 5% of global financial assets, the price of Bitcoin is over $2 million per Bitcoin in today's dollars. Well, what would happen if Saudi Arabia makes the announcement? It wouldn't go directly to $2 million per Bitcoin, but I'm thinking that people that do the grade 11 math, just like I just did for you, they would realize, boy, I better get some. And I think the price spike would be monumental.